the narrative changed. It really surprised me. It was always Bitcoin moved very quick to and I'm seeing institutions using this weakness and not being frightened by it. So they're like, look, this is a fantastic opportunity. I need to use this. I get it. It's a volatile space. They understand. The people who are trying to put capital to work understand. But once the price starts going up again, then you'll see the stampede.
Right.
You know, if Bitcoin's at 65,000 or 70,000, then people say, okay, we've had a year-long correction. It's now going up. Next phase is going to go to 150,000.
Right.
And they'll be in. And there'll be in, and there'll be a mad panic because they've all been doing the work over the last year and a half. So they'll be like, we've got to get in now, Because if they don't, they miss the outperformance of their peers who've got it. And a friend of mine called Emil Woods, who was a subscriber to Global Macro Investor, who was running a hedge fund at the time, an ex-Goldman guy, he said, you need to look at Bitcoin. And I read a bit about Bitcoin. It's probably 2012. And I wrote the first macro piece on Bitcoin, which is, I think, the thing you referred to, which is 2013. I was just like, I saw it and thought, okay, so we've got two things here. One is this asset, Bitcoin, and that's a scarce asset in a digital world, so that's probably interesting. And secondly, we've got blockchain, which is a recorded ownership of everything. Okay, well, that solves the entire financial system, and this could be something useful for the financial system in itself as a new version of gold. So I backed out that the fair value of Bitcoin with gold at 1,300 using the kind of supply, stock to flow ratio, but I kind of backed it out, so it's probably worth $1 million. And then how I like to look at things is, okay, what's the price now? $200. Let's assume, probably rightly, that Raoul is a total idiot. So let's assume he's wrong by 90%. So it's worth $100,000 and it's at $200. That is the best single bet I've ever seen in my entire life. So I bought it and I wrote about it and I sold it after a 10x. So I'd done well from it. Sadly, I got divorced in the process, so I halved that. So there was my tax that I don't pay in the Cayman Island. I chose a voluntary 50% tax. It wasn't a life-changing bet, but it was a good bet. Now, had I held it on to 20,000 when it peaked, yeah, it would have been life-changing. So, okay, so I've been in it. I got out. I was nervous about all of these forking wars and everything going on. I'm like, I don't understand this. Let's wait and see. And then I had talked about it a lot, analyzed it, been involved in it, but hadn't been investing it again until 2019. Started sticking my toes in again because the market had been selling off. I was starting to get comfortable that yes, that we got a recession coming. This is going to be a useful tool. And then 2020 comes along, and I was already positioned for a recession. But this opportunity was like, okay, if the central banks are going to print like crazy, then that's the opportunity. So I bought a lot of Bitcoin. At that point, I was long bonds, gold, dollars, Bitcoin. And then over time, I started charting Bitcoin versus other assets. And I realized its dominance in performance was so extreme that it made no sense to own other assets, even with the fact that Bitcoin can be very volatile and have periods like now where it's down 50%. It's like, it makes no sense to own anything else. Now, I probably will take other bets here and there. But I think my core strategic, so I was Bitcoin first, then I started doing the work. I was on Twitter a lot. And people, if I were to ask anything about Ethereum, people would pile onto me. That makes me want to know more. So I started digging in. I knew about Ethereum and, but I started properly digging in. And I thought, this is really bloody interesting. The chart looks incredible. The chart versus Bitcoin looks incredible. This makes sense to me. So I started switching into Ethereum. Price chart, I think, is the best guide of what the asset is doing, what its trend is, how people are perceiving it, and where it is versus what you might perceive as fair value. So, okay, you notice certain characteristics, like crypto tends to be exponential in price. So you put it on a logarithmic chart, it starts to make sense. You look at things like copper and lumber, they tend to be mean reverting assets because they get met by excess supply. With high prices lead to excess supply. So right now with oil at $100, everybody wants to make as much oil as possible. So the price comes down over time. It doesn't happen with crypto because you can't.
Right.
So you need to understand the structure of markets, where the sentiment is. Is it overly bearish? Like a day like today, it got overly bearish. And so suddenly you start to see a reversal. But my big discovery and why I really started loading up on Ethereum was another chart, which was a understanding that Metcalfe's law was the primary driver of all crypto markets, and in fact, almost all of the tech stocks that we've known today.
Right.
And once you realize that these are basically networks, and once you realize that crypto are networks where you actually own the network. So Facebook is a great network stock and it works perfectly on a log chart and it's an exponential, does all the things as you imagine. You can value it in Metcalfe's law terms, but the fundamental difference is shareholders and network users are not aligned. The shareholders make the money, the network users get the utility. Along comes crypto, you marry the network user with the owner. Okay, now you've got network effects upon network effects. It's religion meets capitalism. It's basically what it is, right? So that is incredibly powerful. So I start looking at the fact that Bitcoin and Ethereum charts just at different points when they, at the same point in the adoption cycle, were remarkably similar. And then it dawned on me is they're all the bloody same thing. They're all about adoption. So if you look at it and if you're honest with yourself, Ethereum, if you think about Metcalfe's law, it's about the number of users and then the kind of connections between the users and the applications built to create those connections. Well, Bitcoin's kind of a one-sided one, which is a bunch of people own it as a store of value, like gold. Nothing wrong with that, but there's not many applications built on it. When you look at Ethereum, it's like, holy shit. I mean, this is like the internet.
Right.
That moment is like, okay, this is far superior a bet. And so that's why I took that bet. And then I eventually shifted majority into Ethereum and then took other bets in the space to express macro views. And then if you think about it in other terms is let's look at Web3 as a network and a network of engineering talent, right? This is where it gets really interesting. Why is it exponential? It's because there are parts when everybody's trying to hire Web3 talent, right? Every single person I know is, right? And the actual pool of people who are capable of doing it is probably like 1,000. And the demand for them is exponential. The demand for the network of those guys becomes exponential. Over time, there'll be millions of trained people and it becomes the network effects. The overall space is very valuable, but the opportunity, that ramp, that's the single most important, interesting part of network effects.
Right.
And the fact that you can own a share of the network. So even when the network flattens out and is now worth, I think, $200 trillion for the digital asset space, it's currently $2 trillion. That's 100x in market cap. That's huge. We've never had anything like this before. Because people keep coming to me saying, when's this wall of money? I'm like, it doesn't come as a tidal wave. It comes as a flow, right? You don't see it until you look back and go, wow. So, I mean, I literally every other day am speaking to the world's largest financial institutions who put me in front of their investment committees and to talk them through crypto and how to invest. And the narrative change, it really surprised me. It was always Bitcoin, can we put Bitcoin on our balance sheet? How should we invest in Bitcoin? What's the diversification? Move very quick to, look, Ethereum feels like it's a technology play that makes sense with the applications. We're interested in DeFi, etc. Then it very quickly became, oh shit, how do we get involved in Web3? So it moved very fast, which is why in the end VC got most of the money, because they saw the broader opportunity. They all came through the 2020 lens of Bitcoin is the asset and the Michael Saylor route, and even me, in the earlier part of 2020, a lot of people came in that, and then like all of us, they kind of go, oh wow, okay, this is much bigger. So I've started a fund of hedge funds, which is invest in crypto hedge funds to allow institutions another way into the market, because they don't really want to buy just ETH or Bitcoin. They want exposure to this $2 trillion asset class is going to go to 200 trillion over the next 10, 12, 15 years. So hedge funds are pretty good for that because their job is to manage the exposure and to capture this big move. So, that's another way that it's coming in that people don't see. It's not all about the Bitcoin ETF. I don't think that's going to move the needle as much. It'll be positive, only in a positive market.